Hi, good afternoon, everybody. Such a pleasure to be here. I don't speak very often in London, just arriving from Zurich. Okay, we're going to talk about decentralizing capital markets, which is one of the biggest industries left untouched by blockchain, which is very ironic. So let's look at a few reasons why that is so. So I'm a former investment banker myself working in capital markets, so I know quite a bit about it. So giving you a brief overview, capital markets have long been characterized as one of the industries that have been known for problems of trust. And that is so because of the high stakes involved. Right? So this industry was birthed or originated to solve the problems of trust between counterparties who may not know each other and who may not trust each other. So we had a gigantic industry, which is called the Wall Street. So this establishes the importance of trust in multi-party transactions. But ironically, these very middlemen and intermediaries, which were formed to establish trust between two counterparties, have come to be known for problems such as self-dealing, moral hazard, and conflicts of interest. And I don't need to tell you, why that is the case. And until now, when blockchain and cryptocurrencies became mainstream, we actually did not have a solution for that. We had to live with the elephant, with Wall Street, and for most of the transactions, such as capital raising or capital formation, which is the lifeblood of every single company, every single industry in the economy, there was no option for us but to deal with investment banks until Satoshi Nakamoto's invention. So for those of you who thought Bitcoin was just an asset, which is very lucrative, which is very attractive, and blockchain is just a technology for incumbent companies and industries to improve their profitability, I must say that you are mistaken. Blockchain has the power to disrupt a big industry like Wall Street because this is at the very core of misaligned interests between agents and the very things that they're supposed to take care of, which is characterized as agency problems. So if somebody asks you, what does a cryptocurrency do, or what is the essence of blockchain, it hits at the very core of agency problems. And we haven't had such a profound invention in decades and in centuries. So welcome to Capital Coin. I'm going to present to you now a disruptive capital markets platform, which is run entirely by smart contracts with zero role of investment banks. And you've had an experience of the magic of ICOs the whole of last year, and till date, ICOs have managed to raise $8 billion, completely surpassing the VC industry and taking them by shock. And imagine what would happen if we were to apply the same concept to the securities industry, to the initial public offerings market, the IPOs, and the securities industry, which is of $86 trillion. Now, there is going to be a mayhem. So you still haven't witnessed that. So there's a saying called, whoever serves two masters has to lie to one, which is so true in the case of investment banks, because when you, as a company, approach a bank for your initial public offering, you're a client to the bank, but also there are hedge funds and institutional funds on the other side, which are also clients to the bank, of course, more important than you. And who are the banks going to be loyal to? I can definitely say that it's not you. Okay. So welcome to the Wolf of Wall Street. We've all suffered from the behavior of these wolves. And just in last year, they made more than $100 billion, only the top 10 banks, and only from fee income, not from the interest income. So this is the fees that banks make by advising on deals such as IPOs, bonds, and M&A. So so that the fee income that the investment banks have made is higher than the net worth of the 10th richest man, which is Michael Bloomberg, who runs a financial services institution himself. So one thing we have to take away from this is wherever there are intermediaries, there is value leakage, and those on both sides of the transaction suffer. And intermediaries do not act in the best interest of the people they are supposed to take care. Okay, so this is a picture of the league tables last year, where the top 10 investment banks made all this fee just on the issuance of IPOs and bonds. Even if you concede that you do require the intervention of banks in strategic deals such as M&A, this whole thing, which is more than 3/4, more than 75% of the fee income, is available for us to immediately disrupt with blockchain. And how can we do that? So Wall Street is too fat. Who is going to take it on? Of course, smart contracts. Okay? So just to give you a perspective, now the current market cap of cryptocurrencies, which is around 0.8 trillion, we've come a long way from $20 billion just a year ago. And we are close to the valuation of Apple right now. And imagine what happens to cryptocurrencies when we start taking on the securities industry, which is $66 or $86 trillion, according to different estimates. So one distinction I want you to take away, when I talk about security token, most of you are probably thinking of ACC's classification of a security token. So when you do an ICO, and if you've been involved with lawyers, they must be telling you how to take precautions so that yours is a utility token and not a security token. Okay? So that's a security token which you have in the ICOs. You must distinguish that from the security tokens that I mean, which are real securities like shares and bonds that real companies in the economy issue when they go to market for capital formation, when they go to market for IPOs and bonds. Right? So what is the difference? So you all must have heard of Howey test and tokens acting like securities, even though they might not be called securities and so on. These are all security tokens which pertain to the ICO domain. Okay? And these are security tokens that are real securities which have not been introduced yet in any of the blockchain applications. We don't have an ecosystem, we don't have a platform, we don't have a marketplace, right? Because this is the holy grail of blockchain. So this is something that is for the first time acknowledged by the mainstream investment banks this year. In fact, in the past week, when both JP Morgan and Bank of America admitted in their annual reports for the first time that cryptocurrencies may be the risk that may erode their business models, and that may lead to them investing a lot more money to be able to retain their customers and clients, which is a big thing to come out of these banks, especially on the heels of statements like Bitcoin is fraud and so on by their own CEO. Okay. So what can these security tokens achieve? What we want to do is enable digital issuance of securities. Let's call them ISTOs, initial security token offering, or initial scrip offering, right? These are different from the security tokens which happen to accidentally come out of ICOs or sometimes purposely come out of ICOs. For example, DAO was a security token as categorized by the SEC. I'm not talking about that. So we've looked at all the top ICOs of last year, but none of them have touched anything close to capital markets. Let's take a look at whether smart contracts can actually disrupt the securities industry. Nick Szabo actually invented the term smart contracts in 1994. And when he invented this, he has a slew of definitions, and I just met him last week in Berlin as well. It's always a pleasure to listen from the pioneer. And he had 4 characteristics of smart contracts, which is privacy, observability, enforceability, and verifiability. And can you actually apply these smart contracts for financial securities is the question that we are researching currently. And the answer is, of course, yes. The difference is blockchains can handle single payments, that is from one party to another. Whereas if you want to disrupt the securities industry or financial smart contracts, then they have to be able to handle multiple payments to multiple parties. So the algorithms are much more complex, and the smart contracts are much more complex, and which is why we haven't seen those kind of applications yet. One, because of paucity of intersection of knowledge between these two industries, blockchain and capital markets. And second is because of the complexity of this. So let's deal with this market first with a simple use case of just issuing IPOs on smart contracts, which is very simple, right? Because we've been able to issue tokens and ICOs, which is a simple ERC20 standard, and it's an open standard, open source. So that's pretty simple. So as long as we have the legal compliance framework for securities, we can simply replicate that for IPOs very easily. Okay, so some of the problems that this model attempts to solve is the real world problems. There is a lot of heterogeneity in the real capital markets. So capital actually does not move to companies, industries, and even geographies where it actually deserves to move. And that is because of various factors like availability of credit, frictions in the market, differential tax regimes, different ease of investment, and so on. Whereas if we replace this with one simple, global, frictionless, and borderless platform, imagine what this can do to entrepreneurs around the world. The problem is mainly because these investment banks are so strongly entrenched in the industry that I have gone around for the past 6 months talking to thousands of people, and most of them have, in some form or the other, told me that investment banks are there performing some valid functions, right? And which is why they had been charging the 10% of fees. And there was no escape from this 10%. So to be fair to investment banks, they did come into existence to solve some problems, and on the right, I explained their benefits. So they came to solve the problems of asymmetric information between issuers and investors, and they came to simplify the complexity of relationships, laws, and regulations involved, and they came to act in the interest of issuers by building price tension. But on the left, you see the arguments against investment banks, because capital markets is one of the most opaque industries you will ever encounter, with thousands and millions of parties like custodians, settlement, security depositories, and so on, which have no role to play in the current technological stack. And the onus falls on us, blockchain pioneers, to show the world the way, saying, where is the requirement for the clearing and settlement? Where is the requirement for securities depositories? So we introduced a new token for financial securities. And this token is to the $86 trillion capital markets industry what ICOs are to the blockchain industry, which is about 800 billion. So in a nutshell, financial securities and security tokens are the future of the blockchain industry. Okay. Not that you require a primer on smart contracts, but smart contracts simply take away all the complexity in the transaction, and it establishes a direct relationship whose performance is verifiable by a computer. So you simply code a set of algorithms or a set of rules into a computer, and the code goes on to verify the performance instead of the intermediaries which are run by human institutions. Okay. Okay. Here is a pictorial depiction of what we have in mind. So we want to create a marketplace for financial securities. Of course, the first phase of which will be the IPO issuance. And the second phase would be the liquidity provision for these securities and a full-fledged marketplace where issuers of different kinds would be able to transact with investors of different kinds simply through smart contracts. So for example, it will be as easy as you having a wallet and you having some digital currency, which is our native digital currency in your wallet, and you responding to a smart contract, which is from the issuer, saying, I want to subscribe to 100 shares, provided the share price is within this range. So it's like putting a stop loss order or various different kinds of orders. So we have enormous flexibility in being able to design smart contracts and customize them for the needs of investors. Okay. So what can this platform do? Apart from the initial issuance, it can also take care of dividend distribution. It can take care of collecting votes, right? So this can make it extremely transparent and reliable and also a very auditable way of ensuring governance. So not only can retail investors like you all participate in this marketplace, but we also have scope for institutional investors, which are currently the participants in the traditional capital markets industry. And we can apply this not only to enterprises and corporates, but also to governments, right? So Indian government, for example, raises trillions of dollars in debt every year, and they are clueless about who to approach and how to get the investors comfortable and so on. So this could be a boon for many such countries which would raise treasury bonds. So not only governments, but even non-profit institutions can raise funding in this format. And not only is this a two-sided marketplace, we envisage this to be a full-fledged marketplace where third-party providers can provide due diligence reports, ratings on issuers, and several other auxiliary products in the realms of regulatory and legal and compliance. So we will actually incentivize blockchain developers as well as these capital market participants by giving away tokens to them to build all such applications. So once this whole platform is live and buzzing and it has taken off, we envisage this to be the foundation block for an asset management industry which looks very different from what it is today. So imagine a venture capital fund or a general partner not having to go to Cayman Islands or Guernsey Islands and setting up a fund, but he is able to set up a crypto fund in seconds, and he's able to invest in real companies and real securities, not just tokens. And he's also able to liquidate those tokens in seconds instead of having to lock up the LP's capital for 10 years. Imagine the beauty of such a scenario. So it's still a long way off, maybe 10 years, 20 years, but this is the foundational building block for such a future. So what can this do? This can be looked at as a vertical integration between a Goldman Sachs and a NASDAQ, because we don't need Goldman Sachs to do the IPO, and we don't need a NASDAQ to list our shares. Okay. Not only that, okay, it can also play the role of an exchange or a peer-to-peer lending platform and so on. So I'm going to skip a lot of these. So essentially, it's an electronic investment bank which replicates a lot of algorithmic processes which go into the order book building, which actually determines the issue price. And we give the tool in the hands of issuers so that they can directly control the issuance price, the issuance process, and the communication with the investors. Okay. Okay. So here is Capital Coin for you. And some testimonials from veteran traders who have traded in the traditional stock exchanges. They have had some good words to say. And interestingly, This is SEC's testimony on virtual currencies, which is as recent as February. So if you read this, it's all speaking in favor of such a platform that we are going to create. So we can't ask for a better testimony than SEC. So in essence, SEC is saying all these inventions are good, but they have to be combined with the legal protection and the legal framework for the securities that exist today. So we are a combination of the legal protection that exists for the securities industry with the inventions and the ease and the liquidity of the token sales that we've already seen. Okay, so if you have to capture the evolution of blockchain industry in one slide, I would say this is it. So first came Bitcoin, which is a profound invention whose profoundness escaped not only the blockchain industry, not only the financial services industry, not only the governments, regulators, economists, it escaped the potential implications even for the founders themselves, I would claim. And then came Ethereum, which created a platform for creating smart contracts of any sort. And then, unexpectedly and shockingly, we had the buzz storm of ICOs, where all of us were crazy and we floated around in the storm. And the next wave is going to be the security tokens. And the final phase is going to be trust minimizing cash flows and bringing blockchain to financial smart contracts, which is the ultimate application of blockchain. We might not be there yet, but security tokens are a bridge between ICOs and crypto tokens and the financial smart contracts. Okay, so in terms of technology, the decentralized exchange technology is not there yet, but we have seen multiple protocol level inventions, and leading is the plasma protocol itself by Vitalik Buterin, but we've had a lot of mind-boggling invention we have seen here. Radar relay, for example, is able to transact between blockchains and without any wallet and without any exchange. This is an illustration of plasma. So I'm just trying to say that the technology which was limiting so far in the construction of decentralized exchanges has also matured and evolved so that we are prepared now to take the next step. And if you read all these white papers like Cardano and Snow White and Thunderella and Algorand and stuff, they are all promising a better future where we will have scalability and performance metrics comparable to that of the centralized institutions like Visa and NASDAQ. Because it's futile to say we want to create alternatives to Visa and NASDAQ, but without the performance metrics. So we are also there. So coming to, sorry? Sure. Okay, so we have a lot of advisors and some global regional leads and so on. These are our potential partners. And we got covered by Asia Sentinel, which called us nothing less than a Uber to investment banking, which is a great compliment, even before we have created our platform. Okay, so I end you with this. Thank you very much.
Thank you.